You already know it. With the surplus of YouTube videos talking about the recession, Fed rate increases, and what all this means for us investors, employees, and employers, in this video, I'll be going over exactly what you should do if you're an employee, an investor, or an employer, so you can maintain your wealth and actually build off this opportunity, so-called the recession. Depending on if you're an employee or employer, there's different action steps that you must take in order to build wealth in this recession and also not have your income completely disappear while the other peers actually build humongous wealth in this opportunity. All right, now let's jump right into it. So for most people, you're going to likely be an employee, and that's completely fine. Being an employee, there's some simple and very easy foundations that you must follow so you can stay and win in this recession like a pro. Now, the very first thing is going to be sitting on high cash reserves. And what this means is that you must be cash heavy in this recession. There's things that you will likely not expect in me also. So this is why you need to be heavy on cash reserves. Have that 6 month in terms of the emergency fund, and also have backup savings where you can pull from in case things go wrong, because you never know when your employer might fire you or you end up actually having to go somewhere else because you got laid off from a job. It's so important that you have cash reserves on hand, and the more the better. You want to aim for at least 6 months of an emergency fund in case things go wrong. So the second step in being an employee that you must do inside this recession is absolutely reduce your spending where possible. What this means is there are things, subscriptions, expenses that you can definitely reduce that you're just staring at, too lazy to get to. Now, here's a perfect opportunity to get your lazy butt out of your chair and actually cancel the subscriptions, and also reduce expenses where possible. This means insurance, subscriptions, Netflix, Amazon, YouTube Premium, anywhere possible that you can save that extra amount of money month to month is going to be very important inside this recession. Now, although we're seeing a huge amount of people in the UK actually cancel Spotify subscriptions in regards to this upcoming recession, this means that companies are going to lose a lot of revenue, and I'm going to be talking about how the companies can survive in just a little bit in the second half of this video. So even if you own a company or you run a business, make sure you stay to the end of this video. Now, the third step in being an employee and to survive this recession is to invest consistently. This is the third step for a reason. The most important step is to follow step number 1 first and finish that in full, having that 6 months in reserves. Then the second is absolutely reducing your expenses where possible. And the third one, if you have surplus of money and if you have extra money month to month, now is the time to invest. If we look at the greed and fear index, since everybody is really fearing the stock market right now, here is the perfect opportunity to invest a large portion while still maintaining your month-to-month consistent investments, because you never know how much this will dip further down, and you never know how far it will recover and how fast it recovers. That's why it's so important to dollar cost average in the markets, and in the long term, you'll be happy that you did so. All right, so for my employers, what should you do to survive this recession? Now, the very first step is going to be reduce reasonable expenses as much as possible. What does this mean? If you run a business, never ever cut your employees as an expense right away. There are other expenses in your business that you know that you can cut, that you should do first before even looking at cutting employees. There's a strategy that Elon Musk does that what he did is, in short, he cut employees to get rid of the bad and medium employees that are not bringing that much value to the company. As an employer, you look at the employees as an investment. If you put 100 grand and give them 100 grand every single year, how much should you expect them to bring in value to you? For each different business, that number may be different. Let's say for Tesla, they pay every single employee 100 grand and they expect at least a 5x in return in value to the business, either in some different ways. Then that employee is either cut, and then someone else is going to replace them. This is a strategy to maintain a company's profits and actually increase it in the long run. Cutting the employees so that he can maintain company profits by bringing in good employees to replace the bad ones. Don't have to, and they're good employees. It's because employees are the backbone in what drives revenue for your business. Yes, you could argue marketing does, but if there's no employees to work for you, then you can't really run a business by yourself. So employees are really the backbones of your business. If you have good employees, they will take your business to the next level, but if you have bad employees, you won't maintain a business for much longer. The second step in being an employee and surviving this recession is going to be try and maintain marketing spend. What this means is that a lot of companies are going to be reducing their marketing spend for this upcoming recession. That means businesses are going to spend less and advertisers are also going to spend less, meaning that the CPC, the cost per click, if you're doing PPC marketing, is going to be relatively cheaper. And if you're doing PPC marketing, you want to lower your bids because other companies are reducing their spend. So that way you can still maintain the traffic source, but also reducing your marketing costs while still having fresh customers entering your pipeline. In the meantime, marketing is what drives the majority of the revenue for your business. You want to focus on the back end. What this means is going to be improving the lifetime value of a customer. This could be upsells, downsells, try and sell them in their email list, collect as much data as possible so you can remarket to them. And onto the third one in being an employer is going to be building an email list. Now, if you don't live under a rock, there's big YouTubers like Graham Stephan and Andre Jick, I believe also, that are collecting emails from the subscribers. What this means and what this means as being a business is that they are trying to preserve their audience from YouTube so they can take it offline if possible and if needed. The email list is one of the most important parts of a business, meaning that if YouTube suddenly disappears and they're on other platforms like Instagram, Twitter, TikTok, and those all disappear, they still have the power of an email list. An email list won't disappear overnight. As long as you have that file downloaded and saved on your computer, you have access and can reach all of your audience. This is so powerful in any business. You should always utilize the email list, and even if you're a little bit more advanced, you can also utilize the SMS phone number list so you can text your customers as well. Since texting is actually more higher intent than email nowadays, since more people are likely to open a text or read a text versus an email. Now that is it for this video. I hope you guys enjoy it. Make sure you take action if you're an employee and employer to maintain your business or to actually build your wealth inside of this recession. Hope you found some value and check out these two other videos about personal finance and investing, and I'll see you guys in the next one. Take care.